Good morning, listeners, and welcome to the Trade Talk podcast. Global markets are again completely mixed. We saw some recovery in US markets in the second half of the trading sessions, but today again, Asian markets are down, especially Hang Seng, which is down more than 500 points. Nikkei is almost flat, but if we go through with US stock futures, then they are a little bit on the positive side, and Singapore Nifty is trading 40-45 points higher as compared to its previous close. 10-year bond yield, crude as well as dollar index are all not in our favor. At the same time, FIs are consistently selling in the market. Indian currency, which was around some 76 level, is quoting comfortably above the mark of 76. And technically, Nifty, which was around 17,450-500 levels, yesterday it closed below the mark of 17,200. But at the same time, 17,100 acted as very good support for the market, where the market is having support of 200 days simple moving average. Also, if we consider the retracements, then between 17,200 and 17,000 market is having excellent support. So unless and until the market is not closing below the mark of 17,000, we can expect rebound in the market to retest the levels of 17,400 or 450. Ideal strategy should be to look for adding position if there is any correction during the day. If there is any higher opening close to 17,300, 350, then we should avoid taking any long positions. For the Bank Nifty, again, the corrective pattern is on the verge of completing around 36,000, 36,200 levels. Again, we can expect rebound up to 37,000 or 37,200. But for that, we need some activity in large cap banks, which is missing, and that's the reason we are expecting Bank Nifty to remain in a narrow range, but Nifty to perform, as Nifty is very close to its long-term support, and if there is any rebound, then we may see the levels of 17,400. So strategy should be to look for adding positions on dips with a stop loss at 17,000. Sector specific, we are going to focus on metal companies. If there is a medium to long term view, then even IT companies looks good, and there we can focus with a view of next 3 to 6 months. For financials, as we mentioned, we need to be more and more stock specific for the time being. Most of the stocks are very close to their important support areas, and there is decent upside based on fundamentals, but currently all these financials are under pressure mainly because of FIs are selling in the market, and also expert investors are waiting for the banks to guide for the next quarter. So based on that, we can expect the activity. Broadly, markets are going to remain completely volatile in a broader range, and ideal strategy should be to look for adding position if there is any specific correction to the support areas, and reduce long position at resistance levels. 17,400 and 17,000 should be the range to trade in the short term. That's all from my side. With this, I'm ending today's morning podcast. Thank you and have a great day to all of you.